All right. Good evening, people. Just a second. Yes. All right, everyone. Good evening. I hope I'm audible. Can I have some response from you guys, please? Yeah. Good evening. Good evening, Samir. Good evening, Shrikant. Hello, Rahul. So good to be back again, guys, with you. Uh, as I promised, I will hold a session on support resistance and training positions. So here I am. Uh, I hope I'm audible, loud and clear. Uh, I'm still waiting another 2 or 3 minutes. I'll let people join in, and then we can move on. I have around 10 people in the chat room. Not much, but anyways, in any case, we'll continue with our webinar. I hope it will be a fruitful experience for you guys. Okay. So, anybody out of you guys who's first time to the webinar? I held a webinar last week as well. Anybody who's new? No response. Nice. Okay, Mr. Pawan, welcome. I do suggest that you go through our previous webinar because that is also one of the basics of technicals. Yes. Mm, okay, guys. Okay. Just one more minute, okay? Then I'll start. Yes, started, guys. Don't message me on WhatsApp now, please. I have to concentrate here. So, okay. Okay, so let's start. Okay, today's session, as I promised you guys, is based on support resistance and trading positions. This is the another in series of trading fundamentals, and believe me, you guys, this is the basics, the really basics. And if you ever wish to make serious money in the market, you got to get your concepts clear about these two things: support and resistance. All right. So this is where everything starts. This is the first thing you look at the chart or any script or stock. The first thing you do is you mark the support and resistance areas, and then you have an objective view. Okay, what is happening in the market? So this is the basics. So in this session, uh, before I proceed, okay, let's as a customary, let us also put forward a disclaimer that trading is inherently risky, and you agree to assume complete and full responsibility of the outcomes, which may not be just limited to loss of your complete capital. All right, and you should always trade with the capital you can afford to lose. Be it anybody, any market pro, he will always limit his downside. Nobody opens position without knowing their downside. It is a strict no. You should always know that if this position goes against me, how much I stand to lose. And likewise, you should not bet too much on a position. All right. And you should, the last line I added just now, that you should never trade with amount, the loss of which will make you anxious, because during a position, if you lose your cool or you get anxious, then you lose your sound trading decision making capability, and that sometimes results in losses. So this is also very important. Moving on, this is the disclaimer. Now the discussion points for today, as we had discussed and I have listed down. I hope I have taken most of them, as you can see. So we'll be first discussing about the trends. Actually, trends we have discussed last time, but with respect to support and resistance also, will I would like to just revisit it again. And then how you mark support and resistance areas. So many people have a lot of confusions, and sometimes even I would make a big mistake marking them, but it is always a trial and error thing. So this is also how to identify. It's a good point that we should cover today. And then the concept of SR, support resistance, in multiple time frames. This was one of the points that somebody put forward to me, that I should discuss this, and how they, what is the importance across the time frames for support resistance of another time frame. So this we should also revisit. And position sizing with respect to support resistance areas. Once you have identified support resistance areas, how do you size the positions? How do you increase or decrease? And how do you take benefit of them? You already know the areas where heavy buying or selling would come in. You hold a position, so what do you do next? So it is about that. And then apart from that, I would likely touch upon the concepts of pivot points and Fibonacci levels. Many of you guys have asked me many times why you always tell this is a Fibonacci level, retracement level, or something. So I would just touch upon them. I won't go into too detail or in depth of those topics. Just little bit touch these points, and then how they are helpful in identifying support and resistance areas again. All right. So you, Mr. Sagar, you cannot see anything. Okay, sorry guys, I forgot to share my screen. Yes, so I should have, alerted me earlier. Okay, so I'm audible. The screen is shared. Can you guys see the discussion points today we are going to cover today? Yes, yes. Okay, sorry for the slight mistake. So these are the discussion points. This is what we are going to discuss. So starting with the first topic, let me introduce myself, guys. I'm Sunny, and you already probably know from the WhatsApp discussion groups that we've been running from past 3 or 4 weeks, and we're trying to discuss the very basics of technical analysis here. And I hope whatever discussion or whatever efforts we are putting in, it helps you guys. Okay, so for the definition of a support resistance, let us revisit to what we discussed in the last session. Let me open today. I have selected SBI chart today because for support resistance I wanted something which is trading most of the time in a horizontal direction, so it will be very easy to identify support resistance areas. This is the chart of SBI. Okay. Uh, Last time we discussed about the concepts of market participants. Okay, I would like to ask you again, you guys, do you remember what kind of market participants are out there? Can anyone just please let me know again? Anybody? Can I have some response from you guys? Samir, not exactly investor or trader. I meant market participants in terms of buyer and seller. At any point in time, if you see, if I tell you, okay, this is the price where a trade took place, this price, so this red candle, and this price 733.7. Oh, this is not SBI, this is some, okay. Some trade took place. There has always have to be a buyer and a seller. Somebody who's selling needs to sell it to somebody who's a buyer who's buying. So at any point we have three market participants. One is a buyer, yes, Samir. One is a buyer, one is a seller, and one guy who is neutral, who's standing by, who's waiting for a right opportunity. All right. So, buyer or seller, or like we say, bulls and bears, it is more of an emotion. If in an intraday chart, if I see a 15-minute chart, if I tell you guys, okay, from this point to this point, the market is in a downtrend. Okay, like we discussed last time, market is in a downtrend. Okay, so I am selling on this complete path down. Whenever it comes closer to this trend line, down trend line, I'm selling. So I'm a bear, I'm a seller. But after this point, within that same day, once it has crossed this trend line, it has broken away on the trend line. I switch places. So from seller, I become a buyer because now I know there was a trend line which is broken, and it has broken with good volumes or something. So I change my direction. Now I become a buyer. So actually, bulls and bears, it is not some entity or something. It is just the market emotion. Within the same day, for initial 15 or 30 minutes, I can be a bear. For rest of the day, I can be a bull. So it all depends on the what anticipation I have about the market movement. All right, what I am anticipating from the market. So bulls and bears is just an emotion, market emotion. Why are we discussing this again today? Okay, because this has got to do with the support and resistance. This is how support and resistance is formed. Okay, if I take any 15-minute chart, let's say, okay, this area, if I tell you this area, okay, can you see I am marking one, okay, horizontal line, and market was moving down, 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 and then something happened in this area that put a stop to the movement. Okay, the market downtrend came to a halt, and I would say it went into a no trending area for few minutes. We are on a intraday chart, 15 minutes. All right, and then it started moving up. All right, now what happens is, now this area, I'm saying okay, this area is a support. Why? Because it supported the fall in the market price. There will be some people who would be selling in this complete area, but then a break came and it started moving up. Now I am a seller. Suddenly I see the market is moving up. I realize, oh my god, I have made a mistake. You know, I've made a mistake. Instead of a seller, I should have been a buyer. Somebody who has sold in this area. Okay, this trade has took place and it started moving up. So that person would be thinking, oh, I should have been a buyer instead of seller. The buyer who has bought at this place, he's happy. Oh my god, the direction is what I anticipated. Now I'm correct. Okay, I was correct in my direction, so I'm right. And then there is a neutral person who's looking at all this. He's saying, oh my god, this was a buying area, I missed it. Now what happens? Market starts moving up. Okay, the seller in the intraday, in the daily positions, you may not be able to allowed to short, but the intraday positions you are allowed to short. The seller is holding on to his losses because the market price is increasing. At some point, you know, it again starts reversing. The concept is this: it again starts reversing. Now what happens is, the buyer who in the initial position has bought at this place sees, okay, the market price is again coming back to the level I originally bought. He is not able to sell at this level, so he sees, okay, this is the level where I could have bought earlier, maybe double the quantity I wanted. So now at this point he buys again. The seller at this point, he sees that my losses are coming to break even again. Okay, I can be out with minimum losses at this point. He has changed his direction. He is no longer confident that the market will go down. So again here he becomes a buyer. The buyer original is a buyer again, and the seller is trying to exit with his loss making positions, and there is a neutral guy who's watching all this. So at this point, all those people are trying to be a buyer. So this is the level, this is the price level, which in effect becomes a support. So do you guys understand why a level is a support and why it is a resistance? Guys, do you see? Can anybody please give me some feedback, so that I'm getting across to you guys? Just Mr. Pawan, just ignore this green candle, okay? Right now, this green candle you ignore. This is a faker, something fake, okay? Just consider the point I'm saying. Why a support level becomes a support? What is the psychology behind the crowd? Yes, Samir. What is the crowd psychology behind that level? Somebody who has missed the opportunity is trying to grab the opportunity. Somebody who has done something wrong is trying to correct himself at that level. So the level becomes a support level. Now again, let's say the same level I'm taking forward. Now again, at this level, what is happening? For the time being, we ignore this brick. Now again, the level has come to the support level. The buyer or maybe a neutral guy is thinking, oh, I should have bought, right? Why didn't I buy at that time previously? Now I should buy. Okay, he is buying. The neutral guy is thinking, oh, this is support. He should also buy. He is buying. Since this level was, continued from the last support level, so here there is some reaction. Okay, and further again, I would cover that. Okay, Mr. Samir, I will cover. Just let me complete what I have to say. Again, I'll take your queries for sure. Okay, a lot of things to cover. Let me quickly rush through them. So now what happens is, at this level, maybe a buyer, if the prices start moving down, the buyer is in loss. The seller is thinking I should have sold more, but then prices again retrace. Now at this point, the buyer would either exit or he would be confident, no, the original direction will be resumed. So the markets move up. But once it breaks this level and breaks with a big move, big volume, this is where the things get very, tricky. The buyer is now confused whether he should hold on to his losing position, he should exit, or he should average. The third is he can average out, so his buying price lowers. So all this market emotion is what is happening in the market, and this is what is forming areas of support and resistance. Okay, so now somebody will ask me, okay, all the areas of support and resistance is where you have some reaction. It is not likely so. The reaction has to be something which affects the main move, right? Like if I say, okay, this price here, let me select something. Oh, this price is moving down here. Some move up came and then it started moving down. The original direction is resumed. This level, does it hold any significance for the time being? For the 15-minute time chart, if I draw a level here, okay, and I want to know if this level has any significance or not. So I have just identified a support area. I need a confirmation. What confirmation will I have? At this level, all this does not exist. Future does not exist. So I'll have to go back and I have to see whether this same level saw some reaction earlier. So yes, there was some support reaction. There was a big candle break. As we support and resistance, whenever they'll be broken, there'll be some huge volumes. Why? Because there are people who are putting stop losses across this. So those stop losses will be triggered and that will result in increase in volume. So generally you will see a big candle, big volume, some move. So you'll be able to identify, okay, something unusual has happened here. On the contrary, if there is no volume with that break or there is no big move, a small candle move, so you can say, okay, this is maybe, may not be, you have to see for confirmation. So this is where look for false breakouts. This is how you look for false breakouts. Okay, now this is one part of support resistance. Another, what I like to confirm is whether the rising support level was able to provide some resistance also. Like, if it is moving down, like we just it is moving down, it is broken here, broken. So I would like to see this level, which is a support, provide resistance at some other level also. You know, here we can see this. So there was a some response to the price movement from down to up at this level. So when I see this and I see a down move support, then this level has a true meaning. You know, this level will hold throughout. Then you can see this is where the prices have really stabilized most of the times. All right, so this level has some meaning. So this is SBI chart 309. The level is 309. You remember somebody asked a query about SBI a few days back. So that buying was around 309 something, and the price was 3.308 point something. So intraday, my suggestion was to not looking good. The resistance would be met at this level, and the person should either take the maximum he can get or exit. You know, for the intraday. For the daily, if we see, this situation will be totally different. You know. Okay, so this much is okay, guys. I'm not able to see your chats, so please refrain from sending any messages. I'll ask you for your queries. Okay, so now this is the support. Uh, Somebody would say then, what is different time frames, how they interact. This was one of the queries I was asked to list in this seminar. Okay, or what is the different time frames? Just to understand this concept, I would like to ask you, just look at this level, this big candle and a small red candle. The price move up was negated by the red candle completely. So this is a 15-minute chart. Let me mark a vertical line on this. And when we go to a 30-minute chart, the same candle has now become a candle with a tail. So this tail is like something which never happened. The body is the real thing. The tail is something which never happened. So when you are moving from between different time frames, you always have to consider the support resistance of the higher time frames. For the lower time frames, they will have no meaning because that particular move has been negated, right? So this is one thing. And whenever I am trying to mark a support level, one important thing is first I'll try to catch the body, and then somewhere I'll try to catch the tops. The only confirmation I need is whether the price made some move across that level or not. Many times it may so have that I have two levels, support levels. So both levels have been significant all through. So this becomes a price zone. Between this zone, I will still consider it a resistance when prices are moving up. So I'll hold on. I'll let it the price clear this level, maybe either up or down, before I'm able to decide anything. All right, guys, some response. All right, so any questions up till now can we have before I move forward? Anything? All fine? Yes. Okay, so let's move on to a daily chart. Okay, so this is the SBI daily chart. And this move here, no, something which is not. I think we should move a bit further back to have a real sense of these curves and how they are interplaying each other. Okay, so let me just see where I can find some good example. I'm actually looking for trading trendless movement, you know, to consider a false breakout or something. Okay. Mm, Okay. Somebody asked me, how do you then identify false breakouts, right? So if I'm telling you guys, mhm, if I'm telling you, okay, this is a support area, you know, this is a support area. The price has some reaction at this level all through. So this is something which I'm saying, okay, this is a support area, likely support area which I have identified. Now on the daily, I see a big break here, you know, big break. Correspondingly, I see that volume is below normal. So I would say, okay, there is a likely possibility that this level has been broken. I'm not sure. I will not be sure. If the next day open and it moves in the negative direction, then it will have some meaning, you know. Otherwise, if it has negated, the next candle has negated this move, then this is a false breakout, which on the weekly, if you see, it will again a tail wick. So this will have no meaning. All right. So this, now the psychology behind this is the price should move beyond this level to such an extent that all the market participants, like the bulls and the bears, they are able to, you know, recognize well that something has changed, something which, you know, it is very easy to find out on the chart, is the first thing you should always consider, because most of the people are looking at it the same way as you are, and market is nothing but perception of all of the participants. So at this point, if you see a big candle here, something here, so you would see, okay, there was a 3 or 5% move down from this level, so maybe the support has been broken, support has been broken. But then once the support has been broken, the support or likewise the resistance will always be retested. So this is the concept of the retest. Somebody again asked me, what is a retest, right? Here this is support, jump, support, jump, support. Now what has happened is, at this point somebody who is buying is putting a stop loss at this level. Agree? Somebody again who is buying here is putting a stop loss here. This is generally what we do, you know. If we are wrong, we try to limit our downside. So now what happens when it tries to break here, all these stop losses are triggered. This triggering of these stop losses is what results in the false breakouts mostly. But then this again moved down, up, down, up. There was a some response at this level, you know. So this is the retest. This is the retest. Somebody who asks me what is a retest, this is a retest. This here was a retest and it moved away. So if I have a shorting position here, I have a short position, let's say in futures, I have a short position initiated here. One is, I'll on the breakout, on the down breakout, I will initiate a position, which most of you guys do. But then again, it can be a false breakout and move in the other direction. Another way to open the position is always on the retest. And trust me, whenever you see a support broken, a resistance broken, within a few days, it will always have a retest. And that is the ideal situation to enter a position, because first, this breakout downside support break is confirmed, and then you are trading in the direction. So all the factors work in your position. So this is how you know, the concept of retest is there. Okay, guys. Okay. So I think the support resistance up till now is clear, right? You can have n number of lines, you know. I can draw a line here. I can draw a line here. I can draw a line here. I can draw a line connecting 2 points, but always this has to be confirmed. You should never trade without confirmation. When you're trading without confirmation, you are speculating. This is the difference, you know. When you're trading without confirmation, you're speculating. But once you're confirmed, see here also, if you say this support is broken, from at this level, then there was one more level support. So this is not actually a false breakout, no, there was a move down, genuine move, but then again a support level is there, so it moved up. The best situation is when you have two supports very close to each other, something like this, genuine supports. If you're entering a position here, your support, your stop loss should be here, because at this support there will be some reaction from the market, and you'll have ample time to get out when the support is broken. Okay, so this is how you can draw many lines, but you should always have a confirmation. So we are looking for confirmation, and we are trading the confirmations. All right, so now again, this is support and resistance. Now what about the trends? Today's discussion is also about trends. So trend, what is the trend? Trend is actually a support line. Uptrend is a support line, inclined, which I can draw something like this, where the prices are taking support. Maybe no, I will take something like this. Why did I take something like this? There, no interest, only 2 points, but I see a major support taking area here. And mostly, uh, as a uh, as a food for thought, you'll always see that your stochastics will always at the support will show oversold areas most of the times, unless it is some divergence or something. Otherwise you can easily find out the oversold areas acting as a support. That again comes of why this happens is you should know what is a stochastic RSI. When I say a stochastic RSI 14, it shows a position of the current price in relation to the previous 14 days. So when it is down, it shows at this level oversold, means past 14 days this level has been the lowest in that particular range. So this generally shows the oversold areas. The same is for the downtrend. You will see the resistance acting as overbought areas. All right, so this is support and resistance is nothing, trend lines are nothing, support and resistance inclined. So this is how you do it. Okay, so next, let us consider one important thing, that how do you size your positions? Very important, huh? How do you size your positions then? Again, as I said, if I'm drawing a support here, I have a buying position here, let's say. Okay, I have a buying position here, I'm going up, there is some reaction, the reaction is a good amount, a 50%, it has come back down, this level has got some meaning for me, I know. All right, then it goes up again, breaks, tries to break maybe, but comes back, so I know that this level maybe it is not a true break, and then it starts coming down to my original level. So at this level maybe I can initiate another position, I can increase my trading size, or I can exit at any of these reactions, at this reaction, or somewhere at this reaction I can exit, because I know that this level is going to have a price, some reaction. So this is how you size your positions also. Now somebody asked me, this is this is very clear, we discussed last time also, but somebody asked me, what about when you have a very new move, when you cannot have support and resistance zones, you cannot identify, then what? So this particular, there was a query about Maruti, so this is what I selected today. Maruti is on a new move, right? On the weekly, let us see, because Delhi has seen some reaction. On the weekly, let us see, Maruti is on a new move. So if I say, okay, this is a reaction level, okay, some reaction was available here and here, and I adjust it, but then it is of no use to me, if I have a trading position initiated from here, what to do here? Now what is happening here? We discussed this on evening star, some pattern. So how do I trade this position? Where is my support? Where should be my stop losses, right? So if you see your moving averages, your moving averages are a very good support areas. Hey guys, let me give you one concept. This is, I'm not sure if it is available in any of the books or not, but this is something which I've been able to understand from my own experience in the market. You know, if you have a mark, this is a move in the stock, right? Can you see this? Can you see this, guys? Yeah. Okay, some you can see only. The rest of the guys sleeping. No. Okay, this is the move in the market, but the prices will never be moving like this. You know, in the dynamics concept, dynamics. If anybody of you have read, prices will be moving something like this. You know, in different waves, right? So this is also your Elliott wave theory, huh? 538, yeah. Elliott waves, huh? So this is the same move, but it again has very small waves, right? So if I want, I can draw this like this. This has the same meaning, right? Right? So if you see, this is your EMA. I always say the EMA of the stock has moved. What is the EMA? I never specify the time frame. And you guys sometimes you ask, but I never specify. What EMA am I talking about? EMAs can be of different intervals, huh? 5-day EMA, 20 EMA, right? And yes, exponential moving averages. So this is the EMA. So that means all this move, can you see my cursor? Right? All this move, all this move has no meaning. The average value, which all of the market has agreed to is the red line. Something above, something below, something above, but the average that market has agreed for that particular stock average price is this red line, right? The EMA of this move is the red line. Whenever I would trade as per the red line, right? Also, there will be one EMA, let's have some other color. There will be one EMA, maybe slightly sloping up, which will be a slow moving EMA, huh? Higher interval moving EMA. Some people use 50, some use 100, 200. So this is telling me the direction. So you see that my trading EMA has got a support at this EMA and then moved up. Sometimes it may go down as well. It does not matter. So there is always a trading EMA and there is a support EMA. This is what I consider. I don't know about the books, but this is what I consider. The red one I generally take as 5, and this blue one I consider as 20, 22 maybe. Why 5 is the number of days in a week and this is a month. So this EMA, no, sorry. This is generally a long-term average, maybe 50. And then there will be one EMA, support EMA with the price move. So this 50 would be, maybe 2 months or quarter, 1 quarter you can agree to, because we are trading the daily charts. So we can all agree to a quarter price. The move in a quarter is what the agreed price. And then we are trying to benefit from the near term price down move. So this is what the price EMA I generally consider as 20. The support EMA I take as 50 and short term EMA 5 to move out the noise. This is all noise, right? So this is something which I have seen working for me. You can have maybe 10, 50, whatever works for you, but then you should always see, well, whatever you're deciding, is the price following that? I cannot simply say, okay, the Maruti is following 522, so I would use it to other stocks also. No, I will just hit and trial and I see. All right. So here I've taken 5. You can see the 5 is moving well, and 22 it is taking support. This is the weekly. That is why on the daily you will see Guys, on the daily, you see 20 is mostly a support, but a long term 50, if I take a 50, is a better support level it is giving me. Can you see? Huh? So, coming back to the question, when the price is moving into a new direction, what should be my stop loss? This 5 EMA is your support. This becomes my support. I would put my stop loss somewhere down here, because I don't want it to turn too much against me. If it has come to 5 day, 5 day, 5 or 50 what, Samir? Support, no, I will take 5. The whole price will take support at 50 maybe, but I want to be out of this position once it crosses, breaches 5, because that way then the 5 EMA will move towards 50. No, the direction has changed. I don't want to wait till this level. Why should I? Once again it touches 50 and jumps back, I'll enter the position again. I have to I have to safeguard my profits also. No, I'm in profit here. Why should I wait till 50? Yes, but I know if this 50 is the support again, either I will initiate a new position here, or instead of putting 5 EMA, I will average my price again. But as a personal opinion, I would say, book half your profits. Take something out. You should be break even, so that in any case you are not in loss, right? So this is how you can see where to put your stop losses and what will be the support for new move areas. So moving on, there are two more concepts. Quickly, I would cover. Maybe I have digressed too much. Fib levels and the pivot points. So first, let us discuss about fib levels. Fibonacci retracement levels are actually the ratios from the Fibonacci sequence. Most of the people, you may be aware, in mathematics we know there is a Fibonacci number ratio. You consecutive numbers you add, and one number to another, that ratio comes out. So this 1.39 between the two successive numbers, and 1 and the two places up number ratio comes out to 1.39. So these are two. Just remember the percentage levels: 23, 38, 50, 61, 76. Out of these, most important are 38, 50, and 61.8 or 62. So in the diagram, you see that when there is a reaction, the reaction generally lasts till some Fibonacci level. Now, why it happens that these levels hold? Because all the market participants are looking after these levels. So they, in themselves, they prove to be true. When everybody is saying, okay, this should jump from 50, and they start buying, that 50 level becomes important. So you have to know this just to see where the other market participants may start buying. On the daily, let us see the Maruti. Let us see, and for the current, I would say, okay, if I will introduce another reverse Fibonacci also. So let me just take from this level. See, the move started from this level, I would say. So if I place a Fibonacci from here to, let's suppose, here, here, this will be better, or this will be better. Okay, let us place here, something here. The move started here. From the reaction point, I draw my Fibonacci's and I say, okay, close to these levels, which is the first Fibonacci, which is 23% retracement. This is a retracement level. I would see some buying coming in. The buying has come much before that, but then this level becomes important to me, 7,402. All right, and then I'm expecting that prices will move again to the zero level. But I just have this level. I would wait for the confirmation. That confirmation will come when the prices actually move away. I will not simply just put in buying. I will wait. Maybe it so happens that this level is breached. Then again, the next level becomes important, and then the 50. But once the 62% level is broken, you can simply say that the other direction move has started. You will not say it is a retracement. It is a reversal in that case, because it is a significant move. right? So now in the current situation, if I put my Fibonacci here from the zero level, right? Actually, this should have been from here, to be honest, because there is a double bottom, no? So this is the start of the move. So if I put my Fibonacci here, or maybe I will take lower again, so I will get some move. Okay. Now if somebody says it has broken this level, how far it can go? How far it can go? In that case, this becomes, I will, reverse the Fibonacci. I will take in the opposite direction. I would say this reversal has taken place. How far it can go? It can go, if you see, 1.618. So this becomes one level. 11,357 on the daily becomes a level. If this previous high is broken, do you guys get it? I may be a little, off here. Just these are the Fibonacci 62, 38, 50. You should remember. These are the levels of importance. I draw here. I see one Fibonacci, and then where is the response? Exactly at 50%. So this is how you see the Fibonacci's are working. Guys, some response, please. Okay, Fibonacci. So the Fibonacci level is this. In detail, I plan to discuss this later. Just I want to, tell you that these levels work. Why? Because everybody are looking after these levels. So when they jump in, you would know that the same points of. So pivot points, just you see the calculation here. Calculation is not important, just for the sake of discussion I have included. Point, high plus low plus close distance. Somebody 1, 2 and 3 all calculations. Twice into pivot point minus low, twice into pivot point minus high. You get in so what zero the I was okay. If I put on a study pivot points, right? Can you see, guys? The screen is visible. Screen is visible. Something happened. Yeah, okay. It is visible, huh? Maybe the connection is slow. So this is an ICICI 5-minute chart. If you see, I've plotted in the pivot points, right? So pivot points, if you see, they are a group of 5. There will be more actually. The white ones are the pivots. Red, resistance 1, resistance 2, support 1 or support 2. Right? There is one 3 also, but that is not important. It is really going way down based on the calculation. So now here, if you're trading based on the pivot points, what is more important is that you will consider only pivots from the last 3 days. 3 is a number, a lot of significance. The trends are confirmed with 3 points. Supports are confirmed with 3 points. So again, this number, the 3-day pivots are what is important. If if you see here, this white were moving, this is where there was a reaction. The price is moving again, and this is, so what happens is, if I take the previous select tool line, okay, just see this. I'm taking pivots from the last 3 days and I'm projecting them. Okay, this is the line, and maybe I want to, this has got no reaction till yet. Maybe this is again, right. So marking these lines, if I just remove the pivots, uh, where is the two? Okay, and I just remove the pivots. So you see, these are again the supports. So without pivots also, you could have marked those lines. These are the lines where the reaction came, support or resistance, some reaction came. So again, my point here is all these pivot points, Fibonacci levels, the support and resistance areas, you mark based on them, but you should never trade them. You should always wait for the confirmation. They're good to identify, but you don't really need them, because anyways the reaction to that level is already visible on the chart. So whatever you're trading, it is there. It helps, significantly helps, if I know that there is a support coming same as the fib level. So I know that okay, many people will be buying in this area. So I will see if people are buying, that means the original move has is intact and I should be a buyer. This is how you decide the positions, right guys? All right. Another one thing I would wanted to just share with you here, maybe on the SBI chart. Okay, let's take. Huh? You should always consider the candlesticks close to the support and resistance. Always, most of the reversal signs of the candlesticks will always be available to close to a support level. Once the reversal is available close to a support, you know that this has level has got significance and something has actually happened. So candlestick sizes and patterns hold significance when they occur at a support and resistance level. Yes, Samir, if we wait for confirmation, prices will go higher. There is there is a term coined for this particular fear of losing out. Have you heard about it? Fear of missing out, fear of losing out, FOMO. You know, that is okay. It is okay sometimes to just let it go. In the anticipation or speculation, you should not open a position. The prices are dropping to a support level. I anticipate, okay, this will have a reaction. So I should not open a position. No, I should always wait. Let the price play out. This fear of missing out has to be dealt with. So it is more about psychology. Your psyche has to be, in tough position, that you should be neutral about emotions, and always decide your exits before your entries. You should know where I will exit, because once you open a position, then your emotions come into play. When your money is on stake, then you are not able to take good decisions. So always decide exits before your entries. So it is okay sometimes, even if, like breakouts, I tell you, most of the time they will retest the breakout level. It happens they will not retest. So I'm okay with missing out that opportunity, because I know I have to limit my downside. Being a trader is not about earning money. Being a trader is more about saving what you have first and then looking for opportunities, right? Wait for retest. Always wait for retest. Okay, guys, I guess you know all the points I wanted to share with you we have covered. Is there anything? Uh, there's a question added by Mr. Vipul. Vipul, can you ask me the question here on the chat? Okay, I'm waiting still, guys. I have 5 more minutes. Anything I can help you with in this concept? How to decide target when the stock is all-time high? Generally, uh, if it is all-time high, you don't really need a target. Just let it go. You should always put a trailing stop loss with the 5 EMA I told you. Or what you can do is you can put in a reverse Fibonacci, and then 1.618 level, which I had shown you, is where you expect a reaction, so you start reducing your positions close to that. Along with that, you see the momentum and everything, and if it is still going steady, let it go. That's always, start taking your profits, moving a trailing stop loss. Having a trailing stop loss is a way of taking profits, because your downside is limited. Right. Vipul, what time period for charts? What time period for charts is? Were you present in our last webinar? We discussed about trading time frames. For see intraday, I would always prefer a 10-30 combination. First time, okay. For the intraday, I prefer 10-30 combination, which is 10 minutes main chart, and the your direction chart should be 30 minutes, which is a sorry, 60 minute, 10-60. 5 is the multiplier, or 530. So 530, 10-60. All right, 5 is the multiplier for the daily. Your trading chart should be daily. Your direction chart should be weekly. Okay, that we are not discussing right now that how to trade the trends can be taken in another session. Entries, you would say, how do we enter a trade is, for me, I generally take a daily trend, weekly, and the entry based on hourly. So on the lower time frame, I see what is happening, maybe I can get a better price, so that ways. Okay. Okay, guys, then I think we can close this session today. Anything we have, we can discuss out later. Okay. Okay. Thank you. Thank you. Thank you.